Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 11th of April 2019, so welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a look at the markets, a few of the charts, the usual stuff. I'm going to cover a few that we looked at this morning just to see how some of these instruments are getting along. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute an investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay. So, now then, let's jump into the charts. Now, the first one I'm going to touch on here, and that's S&P 500. Now, yesterday, from the top three U.S. Indices, so the Dow, the S&P, and the Nasdaq. So the S&P was somewhere in the middle, basically, because the Dow basically barely kind of managed to close in the positive territory. S&P kind of failed to travel towards these recent highs, this week's highs, and but Nasdaq 100 was the one that kind of closed in the positive territory and also made a new high. So, but this one here, the S&P 500, now this is what we're going to look at on the right now. So basically, still what we need here is we need to see a nice good push above this this week's highs, which were around the 2,895 zone, approximately around there. So basically, if we see a nice good push above that level, then yep, this would confirm a forthcoming higher high, and the next level for us could be around the 2,905 level. And just to show you what that level was here, now that was basically the all-time sorry, not the all, it was the low of the 26th of September. Now the all-time high is not far from there as well. It's around the just around the corner at 2941 level, approximately there. So basically, for now, what we're going to do here is for now we need to see that nice good pop above the 2,895 level, and then of course a nice good clearance of the 2,905 zone, which was, like I said, the low of that 27th of September. So for now, guys, of course, keep your eyes on this one. We are very close here to the upside. Like I said, we need to see that confirmation break here. In terms of the upside, oh sorry, in terms of the downside, well, in order to kind of, let's say, aim for lower levels, what we would like to see here is a drop below the 2,862 zone, approximately there. In a way, you could round it up towards the 60, just so the 2,860 level. If a break below that could open the gateway towards slightly lower levels, initially aiming for the 2,830 zone, but if that fails to hold, now this is the area that I'm looking at here at around 2,785. Now, of course, by the time, let's assume if this continues to drop lower though, so by the time it would travel to this area, it could also retest this 200 EMA. So but for now guys, it is slightly still pointing to the upside. Looking at the cash index right now, we may see, let me just quickly have a glance on at that one. So basically, the S&P is currently kind of balancing slightly above the yesterday's closing price, so it's not far, but still kind of below this level right here, below the 2,895 level. So that's why we're going to continue observing it. If we see eventually that push above this, then yep, the next target for us is the 2,905. But if that fails to withhold, well, the path towards the all-time high again could be open. So that's why, guys, be very cautious, in a way be very careful as well. I mean, we could see, like I said, that further acceleration to the upside if we get a nice pop here above these two levels. In terms of the downside, once again, the 2,862.60 level, that's what we're looking for in order to kind of, let's say, start considering lower areas. Gold, now gold is selling off, so the dollar index is popping to the upside, and I was talking about the dollar index this morning. Basically, I was telling you guys to watch it carefully, and you can see that now gold is reflecting that nice move that we were having in the DXY, basically. So gold is now selling off, traveling lower, breaking below the psychological 1300 level, and of course now it's also breaking back below the 1297. Now, don't get me wrong, the day is not finished yet. We might see this as a false breakout, especially if this decides to travel back up and close, let's say, close the daily candle above the 1300 level. Now, if we see something like that, then yep, there is a good chance we could see a reversal and a push back up again. But if it stays below here, especially if it stays below the 1297 level, now this is where more bears could start jumping in again and potentially driving this one lower towards the 1285 zone or even below that. Now, looking at this from a slightly bigger picture, you can see that we're still trading above this kind of long-term upside support line taken from the lows of August last year. So in a way, before we can consider this, of course, we need to see that initially we need to see the commodity staying below the 1300 level, and then of course the kind of the bears picking up on that and potentially driving this one lower towards the 1285 zone. So for now, of course, looking at this picture currently, it is looking more bearish than bullish, but still, let's see how the daily candle is going to close. This is a 4-hour chart, by the way, but also have a look at the daily candle and see where it's going to close. If it's going to close below the 1300, there could be a good chance that we could see the bears kind of picking up on that, more bears picking up on that, and jumping into the action and driving this one lower towards the 1285 zone, or even actually maybe lower. But again, let's not get ahead of ourselves. First, let's see what it wants to do with the 1300 level. In terms of the pairs, now GBPNZD, also I was talking about this one and I was covering this one this morning, and I was telling you guys to watch out for this little formation. It's kind of like it was almost like a falling channel on one hand and the descending triangle on the other, but you can see now the pair is trying to exit this formation through the upper side. Well, let's take it as a descending triangle, and it's trying to kind of exit it through the upper side of it, and of course it managed to break the this key area that I was talking about as well, the 194.20 level. So approximately there, 194.20.15, something like that. And it's having its nice pop here. It's currently trading above it. Let's see if it stays here. If it does, then well, the next target for us here could be around the 1.9490, or actually even we could round it up towards the 95 level as well. So watch out for that one, because basically that's the upper side of this wide range that the pair is kind of trading in since around the end of February. So quite an important range here, in order, let's say, to consider either a further upside move here in the near term. We would like to see, of course, a nice good push above the 1.95 level, and then we will target higher levels. But for now, let's go step by step. Let's see what it wants to do with this little downside resistance line, aka the upper side of the descending triangle, and also let's see where it's going to end the day, and if it's going to stay above this 194.15 level, then yep, we could see further acceleration to the upside here, and we could potentially then see a revisit of the 194.90 or the 195 levels. So For now, looking at this picture at the moment, we are looking. It is looking more bullish than bearish, but then again, the day is not finished, and let's see how this is going to end, and if it's going to reverse back down and travel back below this downside resistance line. And if it does that, then well, I mean, there could be some hopes for the bears to kind of push this one further down, maybe back down towards the 193.15 zone. But again, in order to, let's say, consider deeper extensions to the downside here, we would like to see a nice good drop below the 193.15 level, and only then aim for lower areas. Initially, of course, we will target the 192.70, which also could coincide with the 200 EMA here on the 4-hour chart. But if that fails to withhold, then the next potential target could be around the 192.25 zone. So keep your eyes on this one, guys. But for now, like I said, the downside is kind of slightly off the table, and let's see if it actually manages to push further away from the 194.15 level. Euro dollar. Now this one is a very tricky one, because this morning it was kind of knocking on the door of the 200 EMA, but kind of you can see that it failed to drive higher, and now it reversed to the downside. Of course, the dollar is kind of helping this pair to drive lower. Now what I was talking about this morning as well, and I was telling you guys to keep a close eye on this 112.50 level, approximately there. So, and also keep an eye on this little tentative upside support line taken from the low of the 2nd of April. Now, if we see a drop below this 112.50 level, and also below this upside support line, the path could be open towards this next potential target at around 112.05. So for now, we're just going to target that, but again, only if we see a break here below this upside support line. So for now, it is still here. It is, yes, of course, it is slightly below the pivot, but to be honest, it could also reverse back to the upside very quickly, like it did yesterday, initially when it was selling off, and it looked all negative for the euro dollar, but quickly, kind of by the end of the day, it shifted quickly back to the upside. So in a way, that's why, guys, don't write it off yet. Let's see what it wants to do with this upside support line, or even this 112.50 level. And if it kind of fails, let's say, to stay below these two, then we could see maybe the bulls jumping into the game, and potentially driving this one higher towards the 112.85, or even a little bit further up. But for those who are more on the cautious side, what you could do is, of course, wait until this pair sorts itself out here in this little territory, and if it starts breaking the 112.85 level, now this is where it could become a little bit more exciting for the bulls, for more bulls, and we could see this one traveling further up towards the, of course, initially 113 level, and then maybe a little bit higher. But for now, guys, this is where it is. This is our little neutral territory for now, but we're going to keep on monitoring these key support areas and this key resistance level right here. And the last pair I wanted to quickly touch on as well, I was covering this one this morning, and EURCAD. So basically, we were trading still at that point when I was covering that. We were sitting here slightly below the 200 EMA, but still above this key area of resistance that got broken yesterday, and today, of course, it acted already as a good area of support. So the 150.40 level, it was tested again this morning. And acted as a very good support ground, and allowed the bulls more bulls to jump in on this one and push the pair higher. Now, I was talking about the 1.5060 level as well. So basically, a nice good push above that kind of is clearing the path. First of all, of course, it's creating a higher high. So let's see if the pair has enough steam to kind of travel all the way here towards the 151 zone, maybe just slightly above that, the 151.10, which is marked near the highs of the 28th of March. And if that fails to withhold, then yep, further acceleration to the upside could be possible. But the only thing is that, let's go step by step. First, let's see if it actually manages to travel further up here towards the 151 and the 151.10 levels. If it does, then great, then we'll take it from there. Maybe actually the pair would like to reverse a little bit, maybe retrace a little bit back down. But if this suddenly, let's say, travels back below the 150.60 level, or even actually drops below the 150.40, now this could actually spook the bulls at least for a little bit, and allow the bears kind of to jump back jump behind the steering wheel here and drive this pair lower. And this is where we will target this 149.68 zone, which previously acted as a good area of support here back on the 4th of April and the 9th of April, and we could see a retest of that area again. But first we need to see a confirmation break below the 150.40 level in order to kind of aim for lower levels. For now, the upside is a more viable scenario. It's a more kind of possible scenario here. Further acceleration to the upside could be possible, yes, and let's see how this is going to play out. But again, like I said, we are more bullish than bearish in this one, especially given the fact that it broke above the 150.60 level. So okay guys, I hope you found it useful. Thank you very much for watching and listening, and if you want to join me tomorrow morning at my Traders Espresso, and that's 6 o'clock GMT time, as always, I hope you have a wonderful evening, and I'll see you later. Bye bye.